Hello, and welcome to our fifth video. Remember that in our last video, we calculated the value of our non-current assets, property, plant, and equipment. So now I need to have the other assets that I have, the ones that are for less than 1 year. So those things that I use, okay, for my production. For example, if I have a restaurant, I have inputs, ingredients, okay, to actually make the food. That is called the inventory. The inventory is what I have, okay, left from the year before that I didn't use during the operations, okay. Obviously, as it is the year before, it's the closing inventory. We don't put a closing inventory here because of obvious reasons. We have to be the closing inventory. Okay, we don't state the obvious here. The trade and other receivables are people who owe us money who didn't pay this year that money, but will pay them. And that is an asset that we have, money that would come, okay, eventually to the business, right? It's a current asset because we have actually sold that, but we haven't got the money yet. We will get the money. It's an asset, okay? In some cases, okay, when a company is short of funds, can actually sell that particular as an asset to a financing company and sell it for with a discount if they need cash quickly. And cash, obviously, is what is left in the business. Now, let's calculate here in the trial, but will not calculate because it's already here, the closing inventory that we had. The closing inventory is actually 810. 810. The trade and other receivables, we look at the trial balance. Trade receivables, 2110. And the cash and cash equivalents, which we have 312. That give me a total of current assets of 3232 and give me the total assets of 22112. Okay, I can continue. Now I can calculate the equity. The equity, okay, has the original money that shareholders put in the business, is what we call the share capital. But eventually, over a number of years, this company have had retained some earnings, put it back and reinvested in the business, is what we call the retained earnings. That is the total equity of the company. Can I find the share capital? Yes, it's in also the trial balance, and it's 8,000. We put here 8,000. And what are our retained earnings? Remember that in a previous video, we calculated the changes in equity. That is why I put the changes in equity first as a video. And then I just need to take that value from the changes in equity, which is 3838, and put it here. This value 3838 goes here. 3838, and gives me the total value of the equity that I have now. So that is my total equity. Now, what are the non-current? Let's actually move on to liabilities. I have non-current liabilities. That means for more than a year, companies take bank loans that they pay over 5, 7, or 10 years. It could be depending on the negotiation that they have with the bank. But they have to pay that over a number of years. They actually invest in equipment, for example, and they get loans, okay? That bank loans, they generate an interest. You could see some of the interest is paid and is part of the statement of profit and loss account. Some of them, it's still to be paid over a number of years, but that is a liability, something that you need to pay. We just need to have to look at the trial balance and look at the bank loan. It reads 6% bank loan because it's the interest that it's paying, but it doesn't matter. What it matters is the value here, which is what is owed, 8289, and this value goes here, 8289. So this is for more than a year. Now there are things that we actually have as current liabilities. That means for less than 1 year. We need to pay our creditors. That means people that we got credit from. Maybe we got something and sometimes we have 30 days to pay, sometimes 60 days to pay. But if, let's say, we took the loan of, oh, sorry, not a loan, we bought something and we need to pay 60 days and we got it in December, we will not have to pay until February, for example. Okay, so that's why at the end of the year, there will be some money that we have not paid yet, and that is a liability, something that we need to pay, right? So trade payables is what we need to pay, okay? So what do we need to pay? Let's see here. Trade payables are 1250, and I put it here, 1250. What are accruals, okay? Accruals are payments that are deferred, okay? So in which we owe that money, okay? But let's say part of that was paid the previous year, but part of that is paid the next year. So it is something that we need to pay, but we have paid some of the money, right? So these accruals, okay, is money that we need to pay. And we just simply look at the trial balance at accruals. So it's still money that we need to pay. So money that we haven't paid here, and it's 100, which is actually 100,000. Let's actually put the 100 here. What else that we need to pay? I have put this line here because it's the same line that you would have if you had your assignment. You have corporation tax payable. There is this the banana skin here, okay, that you won't use, or the trap here that you could fall. It is that there is a tax expense and there is a corporation tax payable. Payable is something that you haven't paid, and the tax expense is something that you have paid. Coincidentally, it's the same number, okay? It may be that you have a value that was split into 2 years. Let's say you have an agreement with the taxman to pay a certain percentage this year, 50%, and the other 50% the following year. Coincidentally, is the same value. You can hear 635, 635. This is the value that goes here, 635. So my total current liabilities is this value, trade payables, plus the accruals, plus the corporation tax payable. So my total current liabilities is this value, plus this value, plus this value. Let me do it again. This one, plus this one, plus this one. Gives me 1895. And what are my total liabilities? My non-current liabilities plus my current liabilities, which is 10,274. The liabilities and equity is 22,112. Remember, assets equals liabilities plus equity, the basic accounting equation. I repeat, your total assets should be the same as the total liabilities and equity. If it is not the same value, there is something that you have done wrong in the statements of financial position. Thank you very much. And that is the end of these videos about the statements of financial position, statement of profit and loss account, and the changes in equity based on the trial balance. Thank you very much.